So it's a very interesting analysis which I've done for the index. This is the Nifty chart, and what matters on in terms of technical parlance is one very important phenomena which has happened for the index, which is the golden crossover. Now the term golden crossover means, in very simple terms, when the 50-day moving average crosses above the 200-day moving average. So I've marked them with two lines. The orange line or the red line which you can see is the 50 DMA, and the blue line is the 200-day moving average. This was the point where the golden crossover happened for the index. Now why is this significant? Because whenever golden crossover happens, it's a marking of a start of a new trend for the index. Now, what matters over here is that the index, after going through a golden crossover, has come back towards testing the 200-day moving average, which actually coincides with the 17,000 mark on the Nifty. Why is this important? Because I've done this study for the last 22 years for the index, and there are some very interesting observations which come by. August 2020, post the event of golden crossover, you've seen the index moving up higher, then a retest which exactly ended closer to that 200-day moving average, which is the blue line. Same was in 2019 when the index moved up higher. You've seen the retest, more panic selling, but then it ended closer to this 200-day moving average. Same was the case in March 2019. The selling comes closer to the 200-day moving average and it ends, pauses over here, and then you see a rally. 2017, we actually did not go through a retest of the 200-day moving average. If you go to the next slide as well, very similar observations. You can see on all of the occasions post the golden crossover, the index has not fallen below the 200-day moving average on an immediate basis. This was the attempt over here where the index crossed over, come back to the 200-day moving average, managed to go through a bounce, and then the correction started back again for the indices. And the last slide as well indicates very similar phenomena for right from 2009 to 2003. So over the last 20 years, we've seen this phenomena that post a golden crossover, it becomes very difficult for the index to break below a 200-day moving average on an immediate basis. There is a period of bounce, stability which comes back into the indices, and then if the internals of the markets actually shape down very negative, you see a correction coming back again on the index. So this is a very important observation that post the golden crossover, the 17K mark could be defended and we may not be able to break the 200-day moving average on a strongly convincing basis.